Next week, two major events could drive the market's next move. NVIDIA reports earnings Wednesday, putting the AI trade to the test. Then attention shifts to the Fed at Jackson Hole. And here's what makes this interesting. NVIDIA and the Fed could send stocks in completely opposite directions. So here's what traders should be watching before the week begins. There are 4 things I'm watching: NVIDIA's earnings and guidance, the key levels on NVIDIA, what markets hear from Fed Chair Kevin Warsh around Jackson Hole, and most importantly, what happens if NVIDIA says risk on while the Fed gives investors a reason to be cautious? Because that's where this week could get really interesting. Why NVIDIA matters. Let's start with NVIDIA. NVIDIA reports fiscal second quarter results Wednesday, August 26. And this isn't simply another earnings report. NVIDIA has become one of the biggest gauges of AI infrastructure demand. Last quarter, NVIDIA reported record revenue of $81.6 billion, up 85% year over year, with data center revenue reaching $75.2 billion. So expectations are already extremely high. This time, the question isn't simply, can NVIDIA beat? It's, can NVIDIA beat expectations and give investors enough reason to believe the AI growth story still has room to run? Those previous quarter figures come directly from NVIDIA. But before we try to predict the earnings reaction, look at the chart. Because I'm less interested in guessing Wednesday's first candle than seeing what buyers and sellers actually do. Going into earnings, I'm watching 3 areas: resistance above, support below, and the decision zone between them. A headline can look incredible, but if NVIDIA can't hold a breakout, that's information. And if the initial reaction is negative but buyers reclaim an important level, that's information too. The reaction matters more than the headline. What actually matters? So what should traders actually watch when NVIDIA reports? Revenue matters. Data center growth matters. Margins matter. But one of the biggest pieces will be guidance. Because the market already knows NVIDIA is producing enormous growth. Wednesday's bigger question is, what does NVIDIA see coming next? Is AI infrastructure spending still accelerating? Does demand remain strong? And does the outlook justify the expectations already reflected in the stock? Stocks don't just trade yesterday's numbers. They trade expectations about tomorrow. End quote. The crowded calendar nobody's talking about. Here's something that gets lost in the noise. NVIDIA doesn't report in isolation on August 26. That same morning, the second estimate of Q2 GDP hits the tape. So before NVIDIA even opens its earnings call, the market has already digested a fresh read on how the broader economy is holding up. If GDP comes in soft, that's one more variable shaping how traders interpret NVIDIA's guidance that evening. If GDP surprises to the upside, that changes the backdrop again. Then, less than 36 hours after NVIDIA reports, Jackson Hole begins. That's not a coincidence traders should ignore. It's a compressed window where a growth data point, a mega-cap earnings report, and a Fed symposium all land almost on top of each other. When catalysts stack up like that, moves tend to get exaggerated in both directions. The NVIDIA earnings trap. And this is where traders can get trapped. NVIDIA could beat expectations, and the stock could still fall. Imagine strong numbers hit. NVIDIA immediately spikes. Everyone sees green and starts chasing, but then the stock reaches resistance, fails, gives back the move, and loses support. That's very different from a breakout that holds. Strong earnings plus weak price action can tell you expectations were even higher than the results. That's why I'm not chasing the first candle. Bull or bear? So before we move to the Fed, lock in your NVIDIA prediction. After earnings, bull or bear? Put your answer in the comments before Wednesday. No changing it after the report. Now, the Fed enters the picture. But NVIDIA is only the first part of this story. Immediately afterward, attention shifts to Jackson Hole. The annual Economic Policy Symposium runs August 27th through August 29th. And markets will be listening carefully for clues about how Fed Chair Kevin Warsh views inflation, monetary policy, and the path ahead. TD Securities believes Warsh could offer investors some reassurance while providing clearer signals about his policy approach. But they're expecting gradual change rather than some dramatic policy pivot. That distinction matters. Markets don't necessarily need a huge announcement. Sometimes a change in tone is enough to move expectations. The official Kansas City Fed confirms the August 27 to 29 dates and says this year's symposium theme is Financial Innovation, Implications for Payments and Policy. Why this Jackson Hole is different. Now here's why this year carries extra weight. This is Kevin Warsh's very first Jackson Hole address as Fed chair. He took over the role back in May, so markets are still trying to read him. And unlike his predecessor, Warsh has leaned towards saying less, not more, ahead of meetings. That matters because the July decision to hold rates steady wasn't unanimous. 3 regional bank presidents dissented in favor of a hike, a level of disagreement on the committee that hasn't been seen in years. So going into Jackson Hole, the market isn't just wondering what Warsh personally thinks. It's wondering how much division exists underneath him. A chair who prefers to stay vague, sitting on top of a committee that clearly isn't aligned, is its own kind of setup. It means the keynote itself may matter less than usual, and the follow-through in Fed commentary afterward may matter more. Why stock investors should care, and why should someone trading NVIDIA, AMD, or QQQ care about Jackson Hole? Because interest rates and treasury yields affect financial conditions and valuations. High-growth technology stocks can be particularly sensitive when yields move sharply. So imagine NVIDIA delivers exactly what AI bulls wanted Wednesday, but the macro environment changes immediately afterward. That's why I'm looking at these events together, rather than treating them as 2 unrelated stories. The scenario we've been waiting for. Pallor, now let's answer the question from the beginning. What happens if NVIDIA and the Fed send opposite signals? Scenario 1. NVIDIA crushes earnings. Guidance is strong. AI stocks rally. But then, the market interprets the Fed's message as more cautious on inflation or rates. Treasury yields move higher, and financial conditions tighten. Now, strong company fundamentals are fighting the macro environment. Scenario 2. NVIDIA disappoints, but the Fed side of the equation calms the bond market and yields move lower. Now you've got the opposite conflict. There's actually a third scenario worth sitting with too. Both events line up. NVIDIA delivers, and Warsh's tone gives the bond market room to relax. That's the setup where a move has the best chance of actually holding, because nothing is fighting it from the other side. That's exactly why we're not trying to predict every candle before it happens. We're preparing for the reaction. Don't just watch NVIDIA. And I'm not watching NVIDIA in isolation. I'm watching AMD, semiconductors, QQQ, the S&P 500. And once Jackson Hole begins, I'm watching treasury yields. If NVIDIA rallies and the broader AI and semiconductor trade participates, that's stronger confirmation. If the move broadens into the NASDAQ, even better. But if yields start moving aggressively in the opposite direction, that's another piece of information we can't ignore. I'd also add gold to that watch list. It's been trading as a direct read on where real yields are headed, which means it can act almost like a live scoreboard for how the market is digesting Warsh's tone in real time, sometimes faster than stocks react. GOAT game plan. So here's the GOAT game plan for the week. Wednesday, GDP data in the morning. NVIDIA earnings after the close. Watch guidance. Watch the levels. Watch the reaction. Then attention turns to Jackson Hole. Thursday, the symposium opens. Friday morning, Warsh delivers his keynote. Listen to the Fed, watch treasury yields, and watch whether the broader market confirms or rejects the move. We don't need to predict everything. We need to be prepared for everything. Now lock in your NVIDIA call before Wednesday. Bull or bear? Drop it in the comments. And subscribe, because after NVIDIA and Jackson Hole, we're coming back to break down what actually happened and what it could mean for the market's next move. If you want to see the setups we're following inside the GOAT community, you'll find the link below. I'll see you in the next one.